Backtesting a trading strategy is a very simple but time-consuming process. And in order to do so, in order to actually backtest, we need a few different things. What are they? Well, for one, we definitely need a rules-based strategy, like the ones that you've already learned earlier in the course. Number two, we're going to need charting platform, like TradingView or MT4. Whatever you decide to use is totally fine, but you absolutely need a charting platform in order to backtest. Number three, we're going to need data. Now, for my plan on TradingView, I have plenty of data to test anything that I want. I think I have like 25,000 candles of data on the pro plan, and I'm not sure what the free plan comes with because it's been so long since I had it, but you will need a sufficient amount of data to test 100 trades as your sample size. So ensure that you have those three things, and what we'll also need is a spreadsheet in order to record our trades. Now, you could go through the process of just taking a pad and a pen and writing down each and every one of these trades, writing down your entry, stop, and target prices or the amount of pips that you won or lost, but that would be an extreme hassle and is nowhere near as efficient as just having a spreadsheet do all the work and calculations for you. So what I have done with your welcome email to the course, you should have received a spreadsheet with that welcome email. And what I'm also going to do is leave a link for that in the next video where we're going to discuss the spreadsheet itself and how to use it. I'll leave a link to download the spreadsheet there too, but essentially the spreadsheet is going to look something like this. And what this is going to allow you to do is record the pair that you're trading, record the time, the date, record your stop loss in pips, record the amount of pips that you won. And while recording your stop loss and the amount of pips that you won, it's going to come up with your reward to risk ratio. I'm going to explain all this in the next video. I just want to show you what the spreadsheet looks like. And what it's going to do is calculate your winning percentage for you. It's going to calculate your total percentage gain and your maximum drawdown. So this makes understanding the strategy that you're testing so much easier because of all the calculations it does for you. Again, there'll be a link in the next video for this, and also there should have been a spreadsheet just like this that came with your welcome email. But that's a spreadsheet and also something that we will need in order to backtest. Now let's get into the process, the physical process of actually backtesting. So the physical process of backtesting looks exactly like what you see on the chart right now. Every one of these vertical lines is a 20 EMAR entry. And what you're seeing right now is my testing results from the Euro dollar 20 EMAR strategy. So let's go ahead and just go down to one of these trades. What you will do essentially, or this is the process I use at least for backtesting. If you come up with a different process, that's fine. I just want you to understand how I do it moving forward. So what you'll do is you'll come down to price. You'll look for all of your rules for entry. For us, that is a 38.2% candle below the 20 period moving average that happens within the first 10 candles of the break. And that absolutely is true right here. So once I find that entry, all I'm going to be doing is looking for a 1-to-1 reward to risk ratio. So I don't actually use the position tool. I just use the ruler tool. But if it's easier, and the ruler tool is right here in case you didn't know, I just count the pips. Let me explain what I mean by that. I'll just take the ruler tool. I'll come to the close of that candle, which is where my entry is. I'll go up to the top of the wick. I'll then look and see what the ATR is. Right now it's 22, and I have 14 up to the top of that wick, so I know 14 plus 22 equals 36. So I'll go up 36, and as long as that doesn't get stopped out and 36 pips hits my target, I put a green vertical line. But if that's too confusing and you want to just use the position tool, that's totally fine too. You can go to 36 and 36, and my initial test is always with a 1-to-1 reward to risk ratio set. Now we can change this during the optimization process very easily. That's why we do the initial test with just a 1-to-1, because if we get a decent test out of this with a 1-to-1 reward to risk ratio, then chances are we'll be able to optimize for bigger targets, although we will lose a bit of the winning percentage. So what you need to know right now is that at first, while testing, I always test for a 1-to-1 reward to risk ratio. If my target is hit at a 1-to-1 reward to risk ratio, I place a green vertical line on the very next candle. And the reason for that is that's going to be when I actually place the trade, is on the open of the very next candle. And also, with that being the case and that vertical line being there on TradingView, it does something really cool. It actually shows me the date and time of the trade. So when I go to manually place all of these into my spreadsheet, it's a lot easier of a process because I can sit here and actually look at the date and time and then go over to the spreadsheet and put in the date and time. That's why I use this vertical line, and that's how I initially do every single back test of every strategy that I do, and that's how you see this tested right here. So we'll go to one more example here. Let's do a bullish example. The very next trade. After this trade, nothing happens, nothing happens. Then we cross back above the 50-period moving average. I move my green line over, you can see this, and we get a 20 EMAR entry. I then record that entry. I record whether or not it won or lost. For me, I use green vertical lines for wins and red vertical lines for losing trades. You can use whichever color you would like. I would suggest though using vertical lines again because it saves a ton of time when actually plugging in the numbers on a spreadsheet. So that's how I backtest initially, and what I do after this process. We'll discuss this in detail when we go through the optimization process, but what I do after this is I check my 1-to-1 reward to risk ratio. So let's say I do that for every single trade you see. Every single trade you see, I pointed out initially and I saw whether or not it won at a 1-to-1 reward to risk ratio. Those are the green and red lines you see. I'll explain what these other colors are momentarily. So that's what I did for every one of those trades. That's the way I backtest. What I did from there is I marked exactly what my winning percentage was with a 1-to-1 reward to risk ratio. Then I just go through and look at how many times I could win with a 1.2-to-1 reward to risk ratio. And I color those a different color. In this case, blue. Then I ask myself, did that increase the ROI enough from a 1-to-1 for me to want to switch? And the answer is no. If I go up by 1%, I'm not switching to a 1.2 and losing a lot of accuracy for that 1% bigger ROI. We're going to get into detail on this again in the next video, but here we have a 1.4-to-1 reward to risk ratio. I just changed the lines to peak in order to optimize this and ended up with a 40% ROI instead of a 32% ROI, and my accuracy dropped to 50% instead of 58%. This is something I would consider doing. But again, we'll get into that in detail during the optimization process. I just wanted to show you guys how I actually physical backtest, which is literally taking the rules, the exact rules of the strategy, and pointing them out over the last 100 trades. Normally, I start with 2 years of data. So at this point, it's currently October the 7th, 2021. I would go back to October of 2019, and I would go all the way to current date. If I didn't quite get 100 trades, I would just go back further and keep testing until I got 100 trades with a particular strategy. So those are the nuances of how to backtest that I wanted to get you familiar with before we move on to the next videos in the course. In the next video, we're going over the spreadsheet. I'm gonna teach you guys exactly how to use it, exactly what all the calculations are, and I'm gonna have a way where you can go through an entire course of me actually building that spreadsheet with you so you can really understand the codes if you would like to. That's not in this course itself, but I have a separate course that you got for free for signing up, and I'll give you a link to that if that's something you want to dive into. It's not necessary, but if you want to learn about spreadsheets, you'll have access to that in the next video. But let's go ahead and take a look at the spreadsheet itself, and then we're going to dive deep into optimizing a trading strategy. I'll see you guys in the next video where we're going to talk all about the spreadsheet.